Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 15th. Wow, we're already halfway through the month here. It's going by fast. And we are actually having a pretty scorching week thus far here in Southern California here. Santa Anas are brutal this week. Beach, where we hit 99 yesterday and 90 so far this morning. Crazy. Anyways, we got a lot to go over today, so we're going to jump right into this. Economic news releases. We got the jobless claims. We had 321,000 of people apply for unemployment last week, so the forecast for this week is supposed to be about the same. And wow, we even dropped under 300,000. So first time we've seen that in quite some time that we've actually had a number under 300,000. So good number right there. Now we got the next one. We got the CPI, or the Consumer Price Index. This is the headline number. So when this is inflation numbers for the uh, consumer level. Remember, we had earlier in the week, we had 2 days ago, we had the on the wholesale, which we saw a big spike. So on the consumer level, we had a 0.2% growth in March, and in April the forecast was supposed to be 0.3, and it came in that forecast. So what we also look at is the core. The Fed really looks at the core, which is you strip. What that means is that you strip out food and energy, which creates the volatility, and we had a 0.2, the forecast 0.2, and it came in at expectations. So a little bit higher than what we've been seeing. So it's something, again, to keep an eye on if we're going to have a spike in inflation uh, right now, as we saw 2 months in a row for on the wholesale side. So these are going to be numbers we're going to have to watch here very closely, because if that does spike, does that mean the Fed will be raising rates sooner? Because typically they'll raise rates to fight off inflation, and that's been a real concern that we were too low. So we'll have to kind of wait and see how much inflation goes up here. We also got the Empire State Index for the month of May. So this is the manufacturing in the New York region. So at a 1.3, which is very low. Anything below zero is, of course, contraction. Anything above that is expansion. So almost barely touching it. It was supposed to go 5, and it just took off in May. So good numbers out of New York. Then we got the industrial production, which actually shows the opposite. We had back in March, we had 0.9% growth, but in April it pulled back. So the forecast was supposed to be only a pullback of zero point 0.2, and actually pulled back further than we thought. So April wasn't looking so good, which kind of you can see in the Empire State Index 1.3 for for April wasn't so good. So we'll have to kind of wait and see if industrial production for May will improve. Capacity utilization, we had 79.3%. We had a 70 forecast 78.9, came in just under forecast, so not as good numbers there. Home builders index, we had a 46. Forecast supposed to go up. This is basically the confidence level of home builders, of where they forecast the market, if they should be building or not. And it actually pulled back again. We've been seeing this pullback from the builders for the last several months here, and so they're forecasting where they think the market will be, and obviously they're not paying. This confidence level is going down on there, so we'll have to kind of again watch that, as real estate do play a large role uh, in our GDP numbers. And last but not least, well, actually not last but not least, but we'll go into the Philly Fed. This is the manufacturing numbers in the Philadelphia region. So we had a 16.6, so we had good numbers in April, and it was supposed to come down a little bit to 14.3. It did come down, but not as much as the forecast. So it's good that it didn't reach forecast, but it still went down. So keep an eye on that. So now, because we had so much there, I couldn't fit it on there. Janet Yellen was talking before Congress today, so that's the other item to note that could change the markets where we're at. So as a result, the market is down. The Dow is actually pushing 200 down, so that we're actually down quite a bit. A lot of it's also due to they're taking a cue from the poor economic data that's coming out of Europe. Their first quarter GDP forecast actually came in much lower than they anticipated. They thought it was going to be 0.4%, and it actually came in at 0.2%. So very disappointing out there. They're having some concerns. Germany's thinking of maybe putting some stimulus packages together. June's going to be when they meet up, is going to be an important month for them. So we'll kind of have to wait and see. So get ready for some possible news of them maybe indicating some stimulus packages coming out of Europe in June, and that would translate over to us, because obviously we're kind of tied together here in the U.S. So if they're down and China's down, we're kind of caught in the middle, and we're kind of going a sideways moment right now. So that could also bring us down if they continue coming down. Here's the bond market, and we're actually having a nice rally. So while the stock market's going down, it goes to the mortgage-backed securities or bond market, which helps out, and basically that means interest rates are improving. So we have an improvement in the interest rates, which is fantastic here. So right now we're still in an upward trend and showing some improvement, which is a good sign. All right, folks. Hey, I thank you very much for watching, and I hope you guys have a great day, and we will see you guys tomorrow. All right, have a great day. Thanks.